Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES remained balanced in the upper part of yesterday's range, and the other markets are balanced as well. So yesterday we noted that there was a negative divergence between NQ, TF, and the S&P, where we were seeing some relative weakness in NQ and TF, and ES was holding up. Now, given the overall bullish context, usually these kind of divergences resolve with the weak markets actually catching up to the stronger market. So we're still going to give more preference to buyers as long as the other markets can hold up, and we want to see the other markets actually start breaking out to the upside. And ES should hold above 11 to 13 if buyers are going to remain in control. So as long as we hold above 11 to 13 in ES and the other markets are not breaking lower, and ideally they're breaking out, then S&P could also set up for a breakout to a new high. And given that we're running on light volume and there really isn't any major pending econ release at this point until tomorrow, when the employment report comes out, there could be just some lack of follow through, and overall we could be setting up for yet another balanced day. And the volatility on the upside is expected to be lower in the event of a breakout. So if we break above 18 to 20, we could go up to 25 to 27, where we could get some profit taking, and at that point we could be exhausting even the range on the smaller time frames, so we could start balancing from there. And in the event of continuation, the market could top out at 30.75 to 31.75. Now on the downside, if we break below 11 to 13 and the other markets break down as well, then ES could play catch up, and we could see a move down into the 05 half to 06 half, which is the open gap and naked VPOC, and even test the 0375 and 2000 quarter to 2002 quarter. And then that would be a spot where buyers could step in yet again in the S&P, and the market could balance. But as long as we're holding above 11 to 13, the bias is going to be to the upside, and the expectation is going to be that the other markets are going to catch up to ES rather than the other way around, because that's usually the tendency when we're dealing with a overall bullish market. So heading into today, the focus is still going to be on the long side above 11 to 13. A break above 18 to 20 would confirm that idea, and on the upside, above 20 half, there really is no hard resistance. So on the upside, 25 to 27 is just a range extension idea, which has potential to get hit, but there is no hard resistance. So we do have to read it in real time. And if we notice that momentum is dying off, or the other markets are hitting resistance, then that could be a reason to take profit. So looking at NQ and TF, NQ has its balance high volume node at 48.5, TF has it at 1168, and a breakout above those areas in NQ and TF would confirm that we're getting some pretty decent buying in this market. And then a breakout above 18 to 20 would confirm buyers in control in ES. But as long as we hold above 11 to 13, S&P can look okay. So those are the main ideas heading into the open. Again, overall we can still end up with a pretty balanced session ahead of the main catalyst, which is tomorrow, the employment report. So let's keep that in mind. And I think after the employment report, we'll get some sustained directional movement. So those are the thoughts heading into the open. Let's see how well the buyers hold it up this morning, and we'll take it from there.